I think the first short term is not going to look good. I think right now crypto is in the middle of a deep crisis and hard reset. And I think it's going to be like that probably for the next year, at least. And I don't want to sound like a bit dramatic, but I don't think it's going to be a good period to be in crypto. You need to be extremely resilient, back to what we discussed at first, and need to be prepared for that. However,
welcome to Sobremesa podcast, a show featuring interviews with up-and-coming tech founders. You'll hear their stories, key learnings, and the challenges they face as they scale their startups. You'll also get a glimpse into the latest trends and news from true insiders in their industries. Your host, Matthias at FJ Labs, will run the show in the authentic Sobremesa style. That special time spent after a good meal, hanging with friends, and having interesting conversations. So grab your coffee and enjoy the show.
Welcome everybody to Sobremesa podcast. Our guest today is Ouriel, co-founder and CEO of ZenGo, a crypto wallet focused on simplicity and safety. And yes, today we're going to talk about crypto, the FTX mess, the importance of knowing where to store your coins, what's next for the industry, and I have no idea where this conversation will go, as there's so many things I want to talk about. But we'll just see what happens. And I know Ouriel will drop some knowledge on us, and the conversation will be very helpful. Ouriel, it's great to have you here.
Thanks for having me. Glad to be here.
So you've been preparing for this moment your entire life. I mean, I'm half kidding, but ZenGo is growing like crazy, and obviously a very unfortunate situation with FTX. So lots of people lost money, but it highlights some of the tenets that ZenGo and others in the industry have been proposing for years.
That's right. So I wouldn't say first I haven't been preparing for this all my life, because I've been in crypto only for the last 5 years. And although it sounds like a lot, it's actually not a lot. But yeah, you could say all my crypto life for sure. And indeed, the problem that we are solving, that we were trying to solve 5 years ago, is the exact same problem we're solving today. Is who can you trust for storing your valuables, assets, which today are coins, tomorrow are going to be NFTs, and God knows what else. It's like it's a never-ending story, you know, the security of your digital life and your digital treasure. And the more we're going to go with technology, the more digital is going to become primary in our life. So security is primary. And so the problem is extremely important. And sadly, it has not been resolved. And we can discuss as to why. And I think it's still very, very early in the how it's going to be resolved correctly, although people think it's already resolved, and I think it is not.
So let's rewind a little bit, because you're right. This is not your first rodeo. I think you're not the stereotypical crypto founder. You've been around, and so maybe I think that's why your opinion on this matter is so important, obviously. And so maybe just walk us through your background real quick and tell us, because you've been, put very simply, you've started companies in Web 1, 2, and 3. And so I think you've had a tremendous journey within tech, and it would be good to cover that a little bit.
Yeah, I even was in Web 0, which people don't know, but I think the ancestor of the internet was the Minitel, which was invented in France. It's a very small, very basic terminal that was connecting through phone lines to elementary servers to serve static elementary black and white web pages. And so I've seen that too. that gives you a sense of my age. Indeed, I've seen three technical, we can call that revolutions: the birth of the desktop internet, the birth of the social internet, and the birth of the mobile internet. And I think with Web3, we're seeing another type of revolution, which, by the way, is in parallel developing with another type, but we won't talk about it today, which is AI. I think it's going to be also another major type of like canvas and breakthrough for tech, but that's a separate discussion for someone that is not me. But Web3 definitely changes the rule, and the rule is that this change is simple, is that the content that is produced is also owned by those who produce it. And it sounds like a minor difference, but when you look at the history of content production from the ages, whether this is paper, and then later on, journalism and media, and then with the internet, forever the content that was produced was not owned by the person that was actually producing it. And I think with this technology, blockchain, where the user is at the center, and the element, the keys that enable you to actually produce them goes back to the user and not to the distributor, then there is this kind of reverse rule that is happening where the content producer becomes the content owner. So that's a very, very important change in paradigm that rewrite the rules of the internet. And it's not been done overnight. Bitcoin was not meant to be something like that at first. It was just meant to be peer-to-peer cash. But it so happens that the technology behind Bitcoin, which is peer-to-peer blockchains, where there is not one central entity that controls the content. The content is a piece of digital information, which could be a coin or a piece of text or anything that is of digital nature, is distributed and is not controlled by any central or centralized entity. And what we've seen recently with FTX, and to be honest, not just with FTX, with the first essential 10 years of crypto, is that crypto has been essentially a centralized industry. Not because the technology is centralized, but because the players that are trusted to operate them are centralized. And the vast majority of crypto is stored in centralized services. So that is a major problem because it goes against the promise of what it was supposed to bring. And then happens what happens, right? Accidents after accidents.
Did that inspire you to, because again, you've had several companies in the past and were a very successful entrepreneur before getting into Web3. Like, what led you to start all over again? Because you could have stayed with your endeavors and kind of be well off. Was that inspired you to do it all over again?
Well, I was actually, I could, because I was tempted to go back to the VC world, where usually you have a good life in VC. I co-founded a fund in France, which is fairly successful, and I worked in other VCs before, in Silicon Valley-based VCs and stuff like that. So, but I like action, and I like to be extremely excited. I like to feel the excitement of something that is fresh, that is new, that is promising, that can change stuff at scale. And I wanted to be part of it. And it took me time to figure it out. I was a pretty anti-crypto guy for many years. I was aware of Bitcoin very early on. And I used to be spotting new technologies very early on because of my prior work as a VC, or even because I was a very, let's call that cutting edge, intense blogger at TechCrunch. And so I was really trying to be on top of everything. And so, of course, Bitcoin was on my radar, but I could not understand the meaning of the utility it was really bringing. And it hit me at some point. And the reason it hit me is because all my career, I've been building applications or investing in applications that were built on the back of other platforms, which could overnight turn you off, right? Yeah. Applications that could be
Did you have a kind of a aha moment, or was it just growing into you?
There was a aha moment. And the aha moment is when I realized that you could build applications that you could not stop. And the moment I realized that, first started with a podcast. I think it was a Tim Ferriss podcast that explained that, where for me, blockchains were just a new technology to send money. But okay, all right, that's cool. You can send money without an intermediary. But that doesn't mean, for me as an entrepreneur, what was speaking to me as an entrepreneur was the fact you could build an application on using blockchain technologies, but what that meant is that it could not be stopped. It could not be interrupted. And for me, that was such a massive game changer. And anyone was built any sort of app, a mobile application, a social app on top of Facebook, of Twitter, of anything, know exactly what I mean. You can wake up one morning, the rules change, and your app is gone, including all your business. And so for me, understanding that was like a moment of revelation that got me to think about it more.
And that was 2018, right? That was in the middle of kind of the previous bear market. And, looking at a graph, if you see the price of Bitcoin or any of the major assets, you'll see a valley between 2018 and 2020. Like, What was it like to start a company in the middle of the bear market where people were very skeptical and not that different? I mean, a lot changed, but again, people starting today, they're starting in the middle of bear market, super high skepticism from the community. What did you feel at that point, and what are some tips that you can offer people that are starting companies right now in the crypto space, or thinking about starting one, or maybe afraid, or feel that there's a lot of headwinds?
So first, my interest in crypto started before the 2018 crypto winter. And I decided to do something about that before. It took me a while to really be resolute and committed to it. I did not decide overnight. I mean, there was the aha moment, and between the aha moment and the moment to make a business, it took several months, and I really wanted
but you
to make
pushed
sure that
forward,
there was
even if the crash happened right after. Yeah, we peaked 2017, but you pushed forward and you started in the middle of 2018, so you moved forward regardless.
Exactly. So actually, that was a good stress test to my beliefs, and to make sure that I was making the right choice, because we literally were closing our Series Seed, which was I think the end of the hype period of the ICO market, and the market like literally crashed like a month later. So we were lucky to do that before it was like too late, and crypto became again unsuccessful. But also it started to get us used to the fact that this market is highly cyclical and requires a lot of resilience. That's why I'm fairly zen when I'm facing this current bear market, because we've been experimenting a few times already, maybe not at this intensity, but prepared for it. And I think one thing that I've learned through the revolutions of the internet before, the desktop internet, the social internet, the mobile internet, is that there are those cycles, and that if you stay strong during the tough moments, you'll be rewarded order of magnitude afterwards. We've seen that by the way, in that first crypto winter in 2018, the one that you're talking about, our numbers were like pretty unconvincing. And then when the bear market ended and came back, we didn't know how to deal with our numbers, because they were just like literally exploding day after day. And so what we think is that this market is going through cycles of ups and downs. It was the same with I think the early days of the internet and the early days of crypto. When Bitcoin started, Bitcoin was not always worth $16,000. It was worth single-digit cents, and then dollars, etc. People who stick to their belief and to their vision were rewarded in order of magnitude. So it was a good stress test to start at that moment, but also a good preparation for what we are living now.
That's useful. Did at any moment did you think, hey, this might be it, this is it, where the industry is going nowhere, I'm gonna go back to my VC job, or writing blog posts? Did you think about that at any point, like in the lowest of the skepticism, and kind of, because retail interest plummeted in 2018, 2019?
Yes, it was hard. We had a very strong period of doubts, and any entrepreneur that would tell you like everything is always fine and it's a straight line, you cannot believe him. There is true in any sector. I don't think it's just in crypto, but as far as I can tell, and I'll be very honest, it was tough. Like we had really strong questioning about what we should do, whether we should keep a straight line. But there is two things that keep us always going. Is the fact that you have happy users, even if they are not a lot. Like the fact that you see people telling you that they love your product, that they love to use it, even if it's not that many at the time. It was not that many. Now we are in another phase. But the fact you have this reality in front of you keeps you going. The second thing is we find that we were still extremely passionate about what we were doing, building, the energy in the team, the electricity in the office. And so those things keep you going. As long as you have cash in the bank, you can keep going. Of course, the reality sometimes hit the fan, and then you need to make hard decisions. And sometimes companies do shut down. We were not in that situation, and the opposite. Very quickly our revenue started to grow. We were able to close a nice Series A, and the market boomed again. But now we are again in that moment, right? I mean, not anymore. We were in that moment until a few months ago, and now the numbers are going gangbusters again post FTX, but for different reasons. We can talk about that in a minute if you want. And so what I'm learning here, and maybe that's an insight to share with entrepreneurs in that field, is that you need to be prepared for resilience of tough periods, because they are good stress tests to your beliefs, to your ability to resist the temptation of quitting, and also bring you back to the hard reality. The hard reality are very, very simple. Do you make customers happy? And are you excited by what you are building when you come to the office every day? As long as you have those two things going, you have the fuel for going through any kind of stress test period.
Yeah, that's very, very important. I appreciate that insight. And let's talk about what you were just discussing, and maybe taking a step back, would love for you to tell us a little bit high level about the current wallet landscape. And maybe let's leave MPC aside for a little bit, and we'll explain what that is in a second. Maybe just paint the picture of the two sides of the spectrum, the maybe centralized side, and then the not your keys, not your coins sort of school. So, and then what's your view on the current landscape?
So historically, there is two ways to look at the market of custody. Custody means how do you keep your funds secure, okay? The winning narrative and the market until even now is still the centralized way, meaning that you delegate that responsibility and that trust to a third party, which can be an exchange, a bank, or a lender, and you tell him, here is my private keys, here are my private keys, you keep them for me, and I trust you with that and with my life, if you want to say, and if I need the money, I will ask you permission to withdraw it. And that has created very successful businesses and very large entities.
Let's use names like FTX is one of them, Coinbase, Binance.
Coinbase was really, I think, well, historically, Mt. Gox was the first, but we all know what happened with Mt. Gox. But really, as a legit business, Coinbase, Binance, Kraken, Bitfinex, now the defunct FTX, and also all the lenders, now the DeFi, BlockFi, Celsius, Voyager, and all these companies. So these are, let's call them the winner of the first era of crypto. Why? Because it was order of magnitude simpler, order of magnitude safer, and order of magnitude more familiar. You didn't have to deal with all the complexity and the stress and the liability to deal with what's called, and that's the second category, your keys, your coin, meaning be your chief security officer. So that's the winning reality of the market until today. And crypto, we can say, in a way, has failed to its promise, because eventually what they are nothing else than banks, right? And people have said, all right, let's make crypto because the banking model is broken. But guess what? We created the banking model. Instead of going to a world where the user is in control, we've said, well, you know what? The money doesn't work, but the system that keeps the money seems to work. So let's use that again. Guess what? This also doesn't work. How do we know it doesn't work? Mt. Gox, Celsius, Voyager, BlockFi, FTX, and the list is not over. It breaks every time. Why? Because you have single point of trust. And we already know, we knew it before crypto. We know it also with crypto. It just doesn't work. Why?
Because but this is true for the traditional finance industry as well, right?
That's true. It's true for actually any industry. If you're looking at the scandals of data leaks, right? Equifax being probably the most famous. Any type of centralized database, even secured at some point, will be vulnerable to human error or to all sorts of external attacks because technology is complex. So that is not resilient over time. And so that is not the promise of crypto. It's also not the promise of security. That's not what you want. That's not how it works.
However, so let's go to the other side of the pendulum.
The other side. Yeah. So the other side is your keys, your coins, right? Crypto works like that. You have a public key, which is the equivalent of an email address, which is what you use to receive a value, crypto. And you have a private key, which is like a long password. Okay, very complex password. Sometimes it's translated to a seed phrase, which is a set of 24 words. And those this private key controls, gives the control to the person to send, not just to view, but to send and to transact the funds that are associated with that public key, right? So that's how the world of non-custodial wallets, it's called self-custodial or non-custodial wallet, works. Not centralized, it's controlled by you. And here in that world, you have different variation or taste of that. You have software solutions and you have hardware solutions. What's the problem with those solutions, right? And we're entering into how we are looking at the market. And then, sure, of course. So in terms of software solutions, the popular one, the one that are famous and that have been used for years, nearly forever now, in MetaMask, Exodus, Trust Wallet, Coinbase, which has a wallet on top of an exchange, so Coinbase Wallet, and a few others. And in the space of hardware wallets, the best one are Treasure, Ledger, Coolcard, and a few others, right? But they all operate with the same ID. We're going to give you a private key, and somehow either the software or the hardware is going to enable
and all
you
of
to
these
keep
are
that safe.
non-custodial, including
Non-custodial.
ZenGo. Yeah, and so maybe
ZenGo is not.
Yeah.
So ZenGo, let's put it aside because ZenGo
Yes.
doesn't work like that.
Exactly.
And it's another new category, and it's important because and we're going to talk about why. But let's talk now about why the second category has not won. Why this category is losing versus centralized services is because they are way too complicated, and they put on the user the pressure of security and security management. So how does that work? You buy a wallet to download the wallet, and they're going to ask you to keep safe a set of 24 words. So while the wallet itself could be safe, you still need to preserve what's called the backup of that system. And you are in charge of that. There is no system that protects it for you. And if you lose it, or if someone steals it from you, it's game over. So the question is simple. How do you live in a world where a piece of paper is the future and holds the value of your future? It's not possible. People cannot live with that reality. And so obviously people prefer centralized services because
so number one,
there is a phone number to call.
They were supposed to be better than centralized exchanges is you're holding your keys. And so there's no SBF that can run away with your money. It's you holding them. But what you're saying is, yeah, that transfer the responsibility to you. And the same way you can lose, your keys, your keys to your home, you can also lose the keys to your crypto, and you can have your life savings or other stuff as well.
Yeah,
that's kind of the.
If you that's right. And if you lose the keys to your home, it's okay because you can still break the window and you can get in or call someone. Your home is there. If you lose the keys of your wallet, you lose everything. Absolutely everything. Even if you still have the wallet in your hand. That's the terrible part. And people always realize that too late. They think, oh, that's cool. I'm protected by a hardware wallet. I'm fine. Well, no, you are not fine. You are as protected as your seed backup. And if your seed backup is lost, or if your seed backup is taken over, it's game over.
I think the notion of not your keys, not your coins led to something like $100 billion in lost value, if I'm not mistaken. I think it's getting much better though. And these companies that you named, they're doing a lot of things to make things as easy as possible. But there's a third route, and I think that's where you guys
absolutely.
come in.
Absolutely. So people say your keys, your coin, but the reality, it's like your keys, your problems, right? This is what people realize after they are into that system, or after sadly they've been either phished or attacked or any kind of things of that nature. There are many horror stories, and they are fairly well documented. So how can you do better than that? And this is the problem that we addressed 5 years ago. And we start to think about how can we make the backup, not the key management, the backup, very important to insist on that, in a way that is order of magnitude safer and simpler. What does that mean? Is that something where human error and human attacks cannot happen, or with a probability that is so low that it's not meaningful. And so we looked at the public-private key paradigm. It couldn't work. As long as there is a seed backup somewhere, something bad is going to happen at some point. So we said, no way, we can't do that. We have to look at it from a fresh perspective. And so we looked at another type of cryptography called multi-party computation. It's a big word, but the essence of it is to distribute the responsibility of the security between different entities instead of putting everything on the shoulder of one person. Okay,
yeah, and
that's
we'll call
the
it
high level
MPC from now on, but that's multi-party computation. Yeah,
computation. And so the principle is saying instead of generating a private key that I will give to one person, I will generate multiple secrets that are going to be distributed, that are going to be independent of each other, and that independently cannot compromise the system, but however, that are going to enable to create more elaborate schemes of signature, of authentication, and of backup. And so that was beautiful on paper, but we had to make it a reality because at the time there was no solution like that. There were hardly any company doing MPC. There was another one here in Israel, which since then has been acquired by Coinbase, by the way, but that's it. So we had to start building our own MPC, which is open source, and we had to make a product and we had to make a wallet. And fast forward 5 years later, now it's an entire category of players where there are many companies doing MPC and not just us. And thank God, because that's terrible to be alone in the category. So the way we are looking at the world of wallets today is very simple. You have an entire category, which is private key-based wallets, and they can be software or hardware, and they all have in common that they depend on a backup based on the seed phrase. And you have MPC wallets, where the security is distributed and where you eliminate completely the single point of failure or the dependence on the private key. And so that's what we've been building with ZenGo. And so how does it work? And I promise for the listeners who are going to try it, you are going to feel the difference.
Let's bring it down to earth and show the people what does it mean in terms of user experience.
Exactly. So typically on the wallet, you will open a wallet and they will present you 24 words. You will have to take a piece of paper. You will have to write it down. You will have to rewrite it again. And then you onboard to a wallet. Some wallets make it even worse. They let you in the wallet and you are not backed up. You don't have even the 24 words. You start to use the wallet and you forget to back it up. And one day you move to another phone and you lose it. Typical scenario. So that's the world of wallets before ZenGo. With ZenGo, it doesn't work like that. So you download an application. It's a mobile app for now. Okay. Later on, it will be more things. A mobile application. You enter an email. The email of your choice. It can be an anonymous email on ProtonMail. It doesn't have to be your nominative email. You enter your email. No password. That's it. From that moment, you're going to receive a magic link. You're going to grant permission to your cloud service of choice that you control, iCloud, Google Drive, or Dropbox. And then you're going to do a liveness biometrics. It's a selfie video secured on your iPhone, done locally. And that's it. Your wallet is fully set up and fully recoverable, even if you lose your phone. And so what does that mean? You have authenticated with a passwordless system, no passwords. You didn't enter anything. We didn't ask you to write down anything on a piece of paper. You don't need to remember anything. All you need is your email and your face. So what that means is you lose your phone, or it breaks or whatever, you buy a new iPhone, you take your new phone, you enter the same email, you do the same selfie video securely on your iPhone locally. No one sees you, just on the phone, and you're in. That's it. The other side benefit of that is that only you can access your wallet. Only you, no one else, not someone that has a password that is found on the corner of your table. And that's another enormous jump forward in the industry, is that with other wallets, anyone who has your password can get in. With ZenGo, only you can get into your account. So you have that guarantee, which is really good protection. So what does that mean in essence? So now ZenGo has about 750,000 registered users. We had 0 accounts taken over, 0 case, none in the history of ZenGo of all those users. That has never happened once, where I can guarantee you that in other wallet system that has happened many, many, many times. Why? Because of what I've described. So it's a simpler way to onboard people to a wallet, but more importantly, it's way more secure because it cannot be taken over.
So once you are on board and you can be comfortable that your assets will be safe in this wallet and the user experience is tremendous. I'll post you guys have a tutorial that it shows how quickly you guys people can onboard to ZenGo, which is impressive. But what can you do once you're in? I know I can hold it. What else can I do with ZenGo?
So after that, there is it's a wallet. So what is expected today of a wallet is very simple. First, to store coins, to send and receive coins. So the beauty of MPC that it's also multi-chain, truly multi-chain. It's blockchain agnostic, not like smart contract wallet, which can do only Ethereum and some layer 2. So we do Bitcoin, we do Ethereum, we do Dogecoin, we do Tezos, we do Binance Chain, etc., etc. Today we launch actually Polygon, so you also can do Polygon, send, receive, store. That's the very basic elementary level. You can also have access to financial functions like buying, selling, swapping cross-chain, and staking for now on Tezos, soon on more chain. Okay, so that's kind of the second level of function. And the third one, very important, is the connectivity with application. So you can link your wallet account to applications like NFTs, DeFi, social applications, Web3 gamings, and use the funds that you have in your wallet as to interact with those applications.
Ouriel, what do you think the future of wallets are going? Let's say everybody adopts hopefully secure method, and it could be MPC, it could be another thing, but as soon as that is commoditized and everybody offers similar features as well, where do you think the future, or where do you think the differentiation will be? And do you think you'll start resembling crypto banks in a way? And bank maybe is not the right way, because there's other implications of that word. But do you think that's where you guys are going towards in the future?
Yeah, so I'll just complete with one more element that there is in ZenGo, because it will answer to your question. ZenGo is also supporting fully NFTs, right? And I think NFTs is a very important, not because, people, when they think NFT, they think like PFPs and funny, apes pictures. It's way deeper than that, and I do want to speak about that a little bit, but you can also do that with ZenGo. Now, to answer to your question, I think what FTX, let's call that FTX, it's more than FTX, but FTX has revealed is that wallets are going to become primary trusted interface for people to interact with crypto and crypto services. It's very, very clear that right now we are assisting to, we call that internally a sexodus, right? CEX odus. People are moving their funds out of exchanges because they start to realize the importance of being in control of your funds. And what that means, in essence, is that while wallets were secondary in the first 10 years of crypto versus centralized services, they're going to be as important, if not more important, in the next 10 years of crypto, because they will be the primary interfaces that you trust with your funds. And
that's
now
why you guys and a Ledger and others are going so fast, right?
Yes.
Yeah, it's incredible. It was pretty quick. People were quick to realize the importance. Maybe they had to get burned first, but it's finally happening.
People like, I think, it's when you choose a wallet, it's a bit like you choose a car, or it's an important choice. You make some research before, you're going to Google and you're going to type like most secure wallet, best crypto wallet, things of that nature. And they're going to not choose one randomly. Like most people make an educated choice. I don't think there is anyone on the planet that make a choice of a bank just overnight, just like that, without some minimal information. It's the same with wallets. And by the way, I think the same is going to happen with wallet as with banks. There will be multiple large winners in that space of different colors, of different value proposition, addressing different markets, different type of audiences. But eventually they will be the primary hubs for interfaces with crypto. Now, the dimension that is important, this is why I wanted to mention NFT, is the reason that they are going to become primary is not just because of security promises. It's because only self-custodial wallet will be equipped, fit to serve the development of the Web3 industry. What do I mean by that? Is that if you are a centralized exchange, everything is siloed in a closed off-chain database, right? So you trade, you swap, you buy within the system. It's a bit like, the AOL.com of the internet, where you do the internet, but the AOL style. But the reality is that the internet happened beyond AOL. And the same thing is with exchanges. They have their version of the crypto world within their exchange, but the reality is Web3 services developed at fast scale outside of exchanges on chain. And the only way to interact on chain is with a wallet that is on chain. You cannot interact with an exchange, with a Web3 service, with an exchange. So you must have a wallet to buy NFTs, to play Web3 game, to participate in a social media on chain, etc., etc., etc. And so what I do anticipate is that the next area is going to see a primary dominance of these Web3 services, and therefore wallets will be the tail that follows this development, where you absolutely need that the same way you needed, a browser to do the internet and not just AOL browser, right?
Yeah, or even an iPhone, right? In maybe it's a stretch to compare them, but the iPhone is that you could access a bunch of apps and games and applications through the app store. So again, it's centralized, so it's different, but it's that main source, and you always go back to the phone. And maybe that's a good equivalent for ZenGo and wallets.
I think it's true in general. Like, I think there is this rule of like people need simplicity in the world of complexity, right? They need things that aggregate, things that have been unbundled, because otherwise you just go crazy. There is just too much points of entry. Like, just for example, right now you have this development of new type of wallets that they call like social login, where every time you go to a new service, you have like a new wallet, right? You have a wallet for this or what. But people are going crazy with that, because very quickly they realize they have like 30 wallets, and that doesn't work. People want, it's like as if you had a TV at home with 30 different remotes for each one for a different channel. You need something that is simplifying all this access. And wallets have one property, is that they are aggregating many of the complexities of how you access the crypto. And so I think this is what we do. I don't think we are the only one. I think many companies are doing that fairly well. I don't think this is where we stand out, but I think we have an edge here because we have a particular care of user experience, which is beyond the cosmetics. But it's important to talk about customer support also.
Yes,
but
totally.
I think this is really the dimension, simplifying the access to this complex ecosystem of applications that can be accessed only through wallets and not through centralized services.
Ouriel, I think you touched on two very important points, and I want to go a level deeper, and maybe we can extrapolate some learnings for entrepreneurs on the business sense. Maybe this is true for other industries as well. I think there are two things that you do very well. One is your kind of relentless focus on UX UI, and the other is customer service. And so maybe you can talk about both or your favorite one, but maybe let's start with customer service, because I think it's impressive. You guys have 24/7, and it's so for anybody dealing with crypto, whenever you want to know something about your coins or about your activity, you want it now. You feel very anxious, and it's like, oh, we'll get back to you in 48 hours. And it's like, what do you mean by 48 hours? Like, I need it now. And so having that assurance, I think it's really, really amazing. And how do you achieve that? And what are some learnings for others that maybe they can apply?
So when I started with crypto, I didn't overnight came up with the idea of ZenGo. I tried first like everything that was out there, and one thing that struck me is that the customer service of every single app I was trying, whether this was an exchange or wallet, was absolutely horrifying. I mean, at best they were answering within days, and many times they were just like not answering at all. And like, you can't imagine that this is the future of the economy, and people are going to like just wait for people to answer them on critical things. We're talking about money here. It's the second thing most important after health, right? You can't mess with money. So we thought, like, if we're going to do it, we're going to do it right. And one of the things, and it cost us actually a lot at first, but we wanted to build a system that would make us happy if we were ourselves the customer. So we had a very simple brief, but we wanted to be able to serve it at scale. The brief was, we want people to be answered by humans, and we want those humans to answer fast, right? That was like really the very 101 principle of customer support for us, because we thought that no matter how well we do our job, people are always going to have questions because of the anxiety of external services, the fact that transactions are never instant, or if they involve fees that people do not understand, and just the fact that it's just new, right? So people will always have questions. And so we wanted it to be fast, and we wanted it to be human. The question is, how do you make that operating at scale? And if you go to all the crypto services, everyone will claim 24/7 live chat. They will all say that. The reality, and I invite anyone to try that on any service, it never happens that way. It's as if you were going to McDonald's, they show you the beautiful burger, and you receive 3 pancakes smashed against each other, and that's not looking like the picture. And we wanted the burger that is on the picture to be the one that you're receiving on the plate. So what did we do? Well, I don't have a very great story to tell here. Is we put an enormous amount of care, of attention, and it starts by me, the CEO, being obsessive about customer support, doing myself customer support to really understand what it means. We're using the same tools as everyone. We're using Intercom, and other tools.
But let's add one more dimension, Ouriel. Yeah. Let's add the cost dimension, because you could say, you know what, we'll do this. We'll pour as much money as we want, and we'll make it happen. We'll get that picture of the Big Mac. But maybe it'll cost, too much. And it wouldn't make it viable from a business point of view. So how do you manage that tension?
So at first we did things that did not scale. Like we operated the support at the level that we wanted, but really to understand the pain point, the language of the users, and more importantly, that's the keyword, the patterns. Like to start to get the patterns. When we started to get the patterns, we said, all right, what can we automate in a way that will feel natural without disrupting the experience of answering someone? So what we've built over the years, and now, we're talking about years and years of investment in doing that. We've built a way to automate the answers, to semi-automate, because at the end of the day, you speak to a human, to semi-automate most of the typical answers to the typical question that you will get, so that a human being can answer to someone faster than he can ask question. And so there are many, many things that are involved here, like pre-screening of questions, having a set of battery of can answers that are mimicking exactly the type of question that you're likely to answer based on the path that you are into the app, preparing customer support ahead of any product release to make sure that before the questions are even asked, we anticipate them, making sure that the agents that are trained have the proper information about the user so they can answer before even the question is asked and know exactly what is likely to be the answer. Many, many things like that, so that we are capable today, 24/7, any time of the day, to answer in less than 2 minutes at scale.
And this is all online, right? This is not, can I call online if I want? Yeah.
No, we don't. So not at this moment. We're thinking about adding a phone for our best customers. But for now, it's only chat and email, mostly chat. So it's live chat. And you don't have to trust me or to believe me. Go right now to ZenGo. You don't need to even subscribe on any screen. By the way, that's another first principle. The chat button to support, the access button to support is present on any screen at one tap. You don't need to go to account and help and find out how. It's always present. Try it. You will be answered by a human being in less than 2 minutes. I guarantee. And if we fail, I owe you a Big Mac. And it could be many Big Macs. So maybe I have to buy a McDonald's. But anyway, I'm pretty confident about that. And this is something that has paid off. It has paid off because it helps us reduce anxiety, which is the value proposition of ZenGo. It helps us serve better our customers. It helps us flip unhappy customers. And more importantly, transform them into ambassadors. So that's very, very important dimension of the operation. Sorry.
No worries. That's helpful. And let's talk about marketing as well and customer acquisition, because I think this is another key point, especially more on the centralized exchanges. We've seen a lot of exchange wars, quote unquote wars, and spending millions and millions of dollars in customer acquisition. Maybe before diving into a question, what's the status today of the ban on targeting and advertising on Google and Facebook for crypto-related projects?
It's not good. They have a very clear ban on crypto-native businesses. So anything that is an on-chain business, like a wallet or a DeFi service, cannot advertise on Google, Facebook, Twitter, and most of the big platforms. So that's their choice. There is no law about it, but that's the choice that they've made. You need to be a fully regulated business, sometimes a public company, to be allowed, which at our stage is not possible.
So this doesn't apply for the centralized exchanges, right?
No, so centralized exchange are allowed. That's why, famously crypto.com spending millions of dollars per day, and
Yeah.
FTX was doing the same. so there is a very strong limitation there. And so the question is how do you do in that context, right? You
Do
cannot
you
spend.
think, before answering that, do you think it's a kind of a blessing in disguise, the fact that similar to the 1970s with tobacco companies, that they were banned of TV and radio, and so now it obviously impacted demand, but that now they're saving millions of dollars on not spending this, and you guys are not, maybe the prisoner's dilemma, you're not spending anymore because you're directly banned, whereas FTX and Crypto.com.
That's correct. I mean, we were jealous, to be honest, because it's so much easier to buy app installs from Google and Facebook and Twitter, and we could probably be 10x bigger right now if we could. But in disguise, it's like we had to be more careful with our money by design, and number two, we avoided overspending also, and finally, three, we had to really, really, really become extremely good at finding ways to acquire customers with strong declared intent, right? Versus like acquiring random customers based on demographics or I don't know what other parameters, and find out eventually that it doesn't fit your LTV or your cost of acquisition and your unit economic model. So we had to become really creative around that. And we've become pretty good at two or three things. The first one is SEO. We are, one thing that we've learned is people do a lot of research on wallets before they make a choice. They don't click randomly on banners. And so we become really good at that. If you right now, for example, Google best, let's take, we just launched Polygon today, right? So if you Google best Polygon wallet on Google right now, the number one link will be a link that points to ZenGo. Right now, guarantee you. We became very good at that. So if you look for best, even crypto wallet, not Polygon wallet, I think the number one or number two link will reference us. Tell me if did I tell the truth? Are you checking as we speak?
Yeah, I'm checking.
Okay.
What do I need to? Seven best Polygon-matic wallets.
So click on it.
Yeah.
Click on it. And do you see ZenGo there?
I do see ZenGo, and I see
all right.
But ZenGo is number one. I'll show it afterwards. ZenGo is number one. There's a couple others as well.
There you go.
There we go.
I was not bullshitting you.
I was checking you.
SEO is not just SEO. Anything that captures the intent, anything where there is a search related. So it's true for SEO. It's true for ASO, App Store optimization, and all these kind of things. We've built also a vast network of affiliates that are related to crypto or similar fields, that we operate. I think we have hundreds of affiliates at ZenGo that are referencing traffic to us. We tried influencer marketing. We stopped quickly, didn't work. And it was always kind of shady. So that didn't work.
That's the reason? Is it they were just promoting...
Yeah, it was. I mean, I think like there's now enough famous stories about all kind of weird schemes, and I won't name names, but people know that there are like crazy people in that industry. We tried very quickly. We stopped, and we don't do it anymore at all. Like for now over 2 years.
So what channels are you using? SEO
work.
is one. Then is it publishers that you're using? If it's not influencers, what are you using?
So there are two ways to do SEO. You either create an organic relation with the publisher, and they will write about you because they consider you indeed as one of the best actors, or you have a business relation with them, which is disclosed on their website, and they're becoming an affiliate, right? So there's two ways to do that. So we have a mix of both. We have some that are covering us organically, and some that are a part of an affiliate scheme, which is always disclosed. And so that sounds simple, but again, it's like the customer support. You want to be able to do that at scale. Because you can't like have just like one or two. You need to have hundreds and hundreds of affiliates to be able to have like meaningful amount of traffic coming in when the intention needs to be captured. So we had to build that muscle in, right? And there's a team behind that. There is tooling behind that. There is payment system behind that. Like it's a people think like, the wallet is easy. It's like a calculator. There is a few lines of like whatever coins send, receive, and it's done. behind it, there is like a huge operation to handle all that lead to that, right? Both the technical part and the marketing part and the support part. It's a big operation. But the secret sauce is always to try to automate whatever can be done, because if you have to have one person each time you have an affiliate manager, you end up with a team of 300 marketers, and that is unsustainable. Like there is no economic model that works for that. So again, doing very few things, but at scale and repeatable, that can be semi-automated or automated, and try to do them the best that you can. So we don't have like a lot of creative ways to do marketing. We just try to kind of really good at a few things that we believe that we can achieve well and repeat at scale, right? I think this is really what matters. Now, what we hope over time is that the regulatory landscape will become more favorable to wallets.
Yeah.
I wish there was a way to get a license as a wallet. I wish there was one, because if there was one, then we could open or unlock many new channels of marketing.
Sure.
We could do television, we could do press, we could do radio, we could do Google, we could do Facebook, but right now we can't.
Do you think that's where we're heading? Yeah. If you had to, after the FTX saga, do you think centralized exchanges or wallets will be more regulated, or will the regulation come to DeFi and the non-custodial wallets?
There is, for me, absolutely no doubt that there will be a regulatory framework for there is already one for centralized services. People say we need more regulation to avoid FTX. To be honest, I don't think this is true. The space is already heavily tried to build an exchange. It's like crazy regulated already. The problem is that we had to deal with a criminal, and it doesn't matter what kind of framework you have. If you have a criminal, it's a criminal.
This is more an Enron sort of situation, and not Lehman, not not bank on the run, bank run. It's just criminal Enron style.
Yeah, there was no bank run, and it's not a systemic failure. We dealt with a thief that organized a Ponzi scheme at scale, hidden from his own employees and investors, and that could have happened in any industry.
Was there a way to avoid it? Like maybe board oversight? You're part of, or were part of, a bunch of boards as well. Like, do you think board oversight was kind of lacking here and non-existent, and that could have been avoided that way? Or what are some of the lessons? This is funny. I was reading an article the other day on I don't know whom, but it was like the lessons of Enron, and I was going through them, and I think most of them still apply to the FTX situation today. Like, I wonder if you have any lessons or things that we can do going forward.
Look, let's say the truth first. No one saw it coming, at least from the outside. No. The users, the media. Like, it was the opposite. Not just they didn't see coming. Everyone thought it was the new pope, right? And it was a person of. If there was no scandal, he might have become person of the year, and not Zelensky on Time magazine. But that was the honest truth. However, I do think there were some people that could have found out, and that had the duty to find out and the responsibility to find out. And those were primarily their employees, right? And I think there was many people that could have found out, or that found out and had to go, and that were silenced. And quite frankly, also their investors. I mean, I understand they were duped, but man, a company with no board, with no governance, that raises billions of dollars makes no sense. I don't understand this is even possible, and I think, we're not talking about the smallest investors here, big names, the Sequoia and the whatever pension funds, Temasek, and people like that. So anyway, the point is, there was a way to maybe limit the risk. And, if it's a criminal, he might have done the same thing. And I'm not sure even a board oversight would have been enough. Like, let's recall, Theranos had a board, had full governance, but we dealt with a criminal founder and co-founder, and they still managed to dupe completely.
Yeah, I mean, Enron was a public company.
So, exactly. Yeah. So again, you could, as long as you have a very sophisticated criminal mind in front of you, anything can happen. So, but maybe some things could have been perceived earlier and risk minimized, but obviously didn't happen.
Ouriel, you were co-founder of TechCrunch France, if I'm not mistaken, right?
I found it, yeah. Found it the French version of TechCrunch.
What role do you assign to the media in this whole situation? Do you think they should have had a more prominent role before, maybe to help unwind this, or what do you think the role after the fact should have been or is today?
That's a good question. I think before it was really hard to really say something very different from the outside. I'm sure it was looking. I mean, I was not an FTX customer. I think I put there $40, and not even on FTX. I used like a company that they acquired, Blockfolio, and I didn't there. And this is the money that I lost on FTX. So help me God. But you know, I think looking from the outside, it looked like a really successful company, and you know, with all those stars and those ads, and you know, and you know, the Tom Brady and all these guys. You say, all right, okay, it looks like, you know, it's not my cup of tea, but I understand successful business, and I understand why the media fell for that story. It looked like that from the outside, with a CEO that was also coming with all the woke terminology and the good intention of saving the world. Like, what's not to love? The problem that I do have with the media is, once things starting to fall apart, is the way that there was no nuance about the possibility to criticize him. And everything looked like they were into the same scheme of protecting the guy who created all that mess. And, you know, when you looked into the details, you realized that he was also making donations or investments in some of those media. And personally, I found it extremely disturbing. However, I do want to kind of give credit to the crypto media. The crypto media did an outstanding role. I mean, namely one, you know, CoinDesk. They revealed the entire story, and I think they were a prime example of excellence in journalism.
Absolutely.
So, but the traditional mainstream media, completely off the book. The Wall Street Journal, the New York Times, the Semaphore, yeah, all those guys really gave. It's impossible to, after that, look at the media and think, okay,
do you think that's a
get the truth from there?
Yeah, no, it's absolutely. Do you think that's a top-down decision? I mean, you being founder of one of you know, a very important media tech media piece, like do you think that's a top-down decision, or is it like just embedded in the form of that people operate?
I think it's a DNA thing. I think the media that fell for it is because they're no longer doing their job as journalists, but they're becoming activists. And I think, you know, by the way, you should listen to the All In podcast. Someone says it very, very well. But I think there is very strong thesis in many of those media against tech, against certain, you know, industries, in particular in crypto. And they're trying to say a story that they believe in versus saying the truth. And so it's really, really hard. And I think it's not one person. I think it's an organization. And I think many of the newspapers and media have become that, right? And, you know, the Fox, the MSNBC, the Wall Street Journal, the New York Times. And so it's okay if you want to hear a story that you want to hear, that's fine, but that's not truth. That's a version of the story. And as long as you're aware of that, that's good. But to me, that's not doing its job as someone that is supposed to report the truth.
Ouriel, before I let you go, I know we're right about on time. Two more things. What sort of trends, we can keep it short, but do you expect coming out of these catastrophes that we've seen in 2022? And just closing remarks, where can people find more about you, about ZenGo, and we can close with that.
I think the first short term is not going to look good. I think right now crypto is in the middle of a deep crisis and hard reset. And I think it's going to be like that probably for the next year, at least. And I don't want to sound like a bit dramatic, but I don't think it's going to be a good period to be in crypto. You need to be extremely resilient, back to what we discussed at first, and need to be prepared for that. However, I think there is an energy of builder that is incredible right now. And, you know, we all know the rules of technology, follow the developers, right? So developers build stuff, they fix big problems, they understand where they're coming from, they are extremely resilient, they work efficiently. Eventually, this leads to outstanding services. We've seen it in Web 1, in Web 2, in Web 3, that has led to extremely successful and useful services that we are using still today. Twitter is still being one of them, Facebook and Google and others. So I think we are going to see that. And I think those who will pass that winter will be massively rewarded. So that's what I anticipate. And then, an extraordinary phase of growth and development following. And to find out about ZenGo, the best thing is to Google the best crypto wallet. I'm not joking.
We'll see if SEO works.
Yeah, the best crypto wallet, and you should be able to find it. But otherwise, you can also Google ZenGo and you will find us.
Awesome. All right. Can't thank you enough, Ouriel. Really appreciate the time.
My pleasure.